You are listening to Mobile Payments Today podcast. Are you a supplier or a brand working to elevate the customer experience? The Interactive Customer Experience Association connects brands, suppliers, agencies, and more who are working to create transcendent customer experiences. Let's work together to create a better customer experience ecosystem for us all. Join the ICX Association today at icxa.org.
I'd like to welcome you to another edition of the Mobile Payments Today podcast series. This is David Jones from Mobile Payments Today. We've got a really interesting and timely discussion for you today. As many of you know, the payments industry has gone through a bit of consolidation in recent months with the Fiserv agreement to acquire First Data, followed by the most recent deal involving FIS and WorldPay. In addition to those deals, we've had a couple of top regional banks, including SunTrust and BB&T, agreed to their own deal. We're honored today to have Ken Meyer, the Chief Technology Officer at SunTrust. Look forward to a really interesting discussion. Thank you.
The Interactive Customer Experience Association's mission is to connect B2C brands to technology that elevates the customer experience. Brands have access to resources, project help, news, and insights based around boosting their customer experience. Suppliers gain network opportunities to reach these brands and help them provide solutions to elevate their customer experience. Join today at icxa.org.
Hi, this is David Jones with Mobile Payments Today. We have another special guest this month, Ken Meyer, Chief Technology Officer at SunTrust. He's got a lot of insight on the consumer banking space and is very plugged into some of the more recent developments in the industry and on the payment side. Wanted to welcome Ken to the podcast. We spent a lot of time trying to put this together, and I think this will be kind of an interesting conversation. Ken, welcome, and thank you for taking the time.
Thanks for having me, David. Looking forward to it.
I guess you had an interesting panel discussion last month at South by Southwest where you talked about some of the pain points that consumers are dealing with in terms of their financial wellness and dealing with, how they decide to establish a banking relationship. I was curious if you could kind of give us kind of a sense of, what you're seeing in that area, because what we've been running across is a lot of new challenger banks and establishment banks that are really trying to promote financial wellness and education and making banking customers feel more secure about their financial situation. Can you talk a little bit about that?
Yeah, sure. It was a great opportunity at South by Southwest. Appreciate the opportunity by Fast Company to talk at the Fast Company Grill about, really how our consumers and our clients are stressed about the topic of money and how their expectations are changing and really how technology can play a really strong role in reducing that financial stress. Had a great panel, some folks from Microsoft and Will Hurley from Strangeworks, really fascinating folks talking a lot about AI and different ways that new leading technologies can really help solve some of those problems for our clients. But at the crux of it, we're a purpose-driven company. We've been on a mission, if you would, to light the way to financial well-being for our clients and really increase their financial confidence. And a couple years ago, we launched a movement called On Up, where we really felt like it was our responsibility as a financial services organization to reach out and not just for our own clients, but others, start a conversation around money and make it safe for our clients to feel good about talking about money and help them regain some confidence, because we did a lot of research and trying to understand our clients, and more than 80% of Americans lay awake at night worrying about money. And the reality is it's because money is stressful. People worry about paying bills and emergencies and what's going to happen next with their family, and their rent and insurance and all kinds of things. And 40% of Americans don't have $2,000 saved for an emergency.
Yeah.
And that number, frankly, rises to 60% when you look at the millennials. And 1/3 of Americans don't have anything saved for retirement. And if you think about that, as people are living longer, that puts people in a position, really to be more stressed out for a longer time in their life. So, we see this as something that is our responsibility to assist our clients and Americans with, and we think that technology can play a huge role, and really help them reduce that stress.
What can a bank do for these customers to help them deal with this? I mean, are you teaching them how to save better, or are you teaching them how to manage their debt better? What specifically can you do to help?
So I think as a whole, right, financial services institutions and banks specifically have an opportunity that maybe your traditional fintechs, if you would, may not be positioned as well to do. So you look in a lot of the fintech providers that are out there have a lot of point solutions and point apps that solve maybe a piece of somebody's journey and may help simplify certain aspects on it. And let me tell you, I'll be the first to tell you, we consider ourselves a fintech in many ways. And we're not necessarily out there to compete daily with fintechs, but in some cases we do, and in some cases we partner with them, and they happen to be a fantastic source of knowledge and partnership for us to look to enrich our experiences for our clients. But when it comes to how we can help, we can leverage technology and insights and analytics to help people and provide subtle nudges when they're opening up accounts and when they're setting those up to put a little money aside into a savings account to ensure that they're setting themselves up for those emergency situations or helping them reach their goals. We can be more transparent about what's going on. So a great example, we launched our Smart Guide solution, which is really a digital way for us to work with clients to originate mortgages and to be able to provide insight into that process and simplify that process and allow people to really kind of become part of the process. We've seen tremendous adoption, and we're just coming on a year now with launching that product, and 80+% of our applications that we're receiving now are actually being used on a digital engagement platform like Smart Guide. So, whether it's providing insights, providing better products or better experiences or tools. We launched onup.com, and there's a tremendous number of tools available to our clients at no cost. And we're even working not just with consumers, but with companies. We invested and purchased a company called 8 Pillars years ago, and we've converted that into our Momentum On Up platform, in which at no profit to SunTrust, we're working directly with corporate and commercial and small business clients to really roll out a way to help put their employees through a program and a series of training courses, if you would, that allows them to become more financially confident. So this is about truly educating, but it's also about educating in a way that's actionable so that way our clients can take steps towards financial confidence.
Let me ask you this. There's a sense just in our reporting that if you're a small business or an individual, a consumer that doesn't have a big savings account or a loan, that traditional banks are not for you because, you can't really leverage, your large account to, get certain benefits from, the big banks. A large bank may have a lot of branches, may be easier to reach in terms of, getting to an ATM because, there's a branch in every corner. But, if you don't have, a big direct deposit with them every 2 weeks or, a big loan or a mortgage or something, you don't have, that kind of special relationship with the bank that you might have with a credit union or a community bank or a fintech or something along those lines. How do you respond to those type of concerns? And, that kind of along those lines, I mean, people talking about access to credit, that type of thing. I mean, how do you respond to that?
Yeah, I mean, I would say this, me playing in the role of technology, those types of questions are probably better suited for our business folks that are looking at the business strategies and how they can help folks. But I will tell you without a doubt from a SunTrust perspective, because I can't comment on how other competitors look at this.
Right.
We believe that we should be invested in our communities and we should be helping our communities grow. And small businesses are a huge component of the community. And when I think of the different things that we bring to bear, we've had a lot of success with our one team approach in the wholesale side, and having spent some time over in the business and wholesale, I can tell you that our approach to working with clients when it comes to small businesses and medium-sized businesses in the commercial space, we're bringing all of our toolkit to bear for our clients. And so regardless of what you have today, we want to talk about what do you want to achieve tomorrow as a small business and how can we help you? And it doesn't matter if you're a small business and commercial. There's a lot of commercial businesses that want to be able to leverage some of the big bank capabilities that they may not get from some of those institutions, David. And I think the reality is, we've been in a nice spot from the ability to stay close to our communities and offer things like corporate investment banking services. And in a lot of places, the investment banker may not pick up the phone when the commercial banker calls them to talk about the opportunity that they have with a small business or a smaller business.
Okay.
At SunTrust, we bring the best people to the table and provide that industry expertise. And not just in that space. A lot of our small business owners are also people that are looking for help from a personal perspective. So, not only bringing all of the toolkit together, but also looking at private wealth opportunities to help these folks not only manage their business, but their personal wealth. I think that's a choice from a strategy perspective and how you go to market. But I think that we are today, and we will continue to be very involved in the communities and helping those customers and clients achieve those dreams.
Okay. You talk about your specialty is technology. I wanted to ask you a couple of questions about, technology and legacy banks and some of the newer direct institutions that are coming out.
Sure.
Where is the industry overall, and where are you guys in terms of modernizing your technology to deal with some of the preferences of these younger consumers, mobile banking, contactless, being able to make a deposit without going into a branch, and just kind of responding to requests for credit and turning things around quickly. How big an issue is that for a bank of your size and stature?
I think it's always top of mind, right? So when you think about what do our clients expect, I think you mentioned neobanks and fintechs and entrants like that into the industry, and I think even more so than the neobanks and the new entrants, I think our clients' expectations are changing based on just their everyday interactions with all different industries, whether it's the Amazons or the Ubers of the world. Client expectations around making things more simple, making things more digital, absolutely play into how we think about providing experiences back to our clients. And first, I think we really need to understand and ask our clients what they want and really do the right research so we're designing those experiences correctly. From a technology perspective, the modernization of our infrastructure and our applications are definitely top of mind. I would say, we're not necessarily, playing defense all the time. I think we look to play offense quite a bit. We were early adopters. I mean, you talk about kind of that relationship management. We were early adopters. We've been a Salesforce customer for 15 years. I think in a number of places we're seen as a leader in how we leverage some, SaaS-based cloud capabilities there. We've been, originating loans on the nCino platform to provide a better experience for our clients for 2+ years now. In our wholesale space, we're now actually onboarding clients with treasury and payments products using that nCino platform. So again, a cloud-based SaaS platform, which recently rolled out just here in the last quarter. We look at partners like Amazon Web Services and others to be able to be scale busters for us and allow us to focus on really modernizing our technology and delivering value to our clients faster. I think about some of the things that we've done even on our mobile and our digital platforms. So we've spent a lot of time to make sure that the underlying architecture that we have for things like our mobile banking solutions and our online banking solutions put us in a position to modernize and then ultimately go faster on feature functionality parity, and also creating new features and new functionality that we believe, through our client research, that our clients will value. So we've always, in my opinion, leaned in hard when it comes to how to modernize the technology. I think, things like real-time payments, we've been accepting real-time payments for a while now and have been early leaders in that. Things like Zelle, we were one of the first regional banks, if you would, to get onto the Zelle platform.
How's that going for you?
I think there's very well. We see, continuously higher numbers of payments coming through, leveraging Zelle, and we continue to increase. I mean, I think the reality for us is that, you can't always be a fast follower.
Right.
But you also, a regional bank, it's tough to be able to be on the leading edge of everything. So we have to really be mindful of where we're going to spend our money and where we're going to invest and where we believe it's going to have the most impact on our clients. But, what real-time cores and cloud-based core banking solutions and other things are here and now. And we need to be thinking about how are we going to modernize everything in the bank, not just the digital platforms in the traditional sense of mobile and online, but how do we continue to reinvest even on the teammate side, where we want to put the best experiences in the hands of our teammates so that way they can serve our clients in the best possible ways.
Where do you think things are going with branches and ATMs in terms of usage? And are you seeing more people use, Zelle for funds transfer, bill payment? Where's that going?
Well, I think it depends on how you look at it. If you look at it from a North American perspective versus a global perspective, I think you'd see different trends. From a global perspective, obviously, you've got folks that are new entrants that are really disrupting a lot of the brick and mortar, places. You've got countries that are moving to cashless type environments. But here in North America, the reality that we've seen, and I think what we will continue to support, is our clients prefer choice. And they want the ability to choose whether or not they want to interact with somebody in a brick and mortar branch, or they want to just go to the ATM, or, many folks, including us, have video ATMs. So if they want to see somebody behind there, they can. But, I think the reality is that mobile adoption continues to increase. Online adoption continues to be strong. And we see, a lot of people still wanting that human element, whether that be in our branches, our ATMs, or our contact centers. So they're still very relevant in North America and for our clients. And, I think people are trying different things, and we will continue to look at different ways to engage in the brick and mortar space. But there's still going to be a channel. They're still going to be invested in. And we're still going to pay attention to them because our clients are still, they vote with their feet and where they want to be served, and it's still relevant right now.
There's been a debate, as I'm sure you're aware, in recent months about this whole movement in retail and restaurants and things like that towards cashless, and there's been a bit of a backlash in terms of cashless. And in the UK, there's a lot of concern about access to cash in places where you have fewer branches and fewer ATMs and things like that. Where do you see the debate going in terms of access to cash and being able to do transactions in cash, and more generally kind of access to banking for the underserved communities?
Yeah, I mean, look, I on a personal thought, I mean, for me personally, I don't personally use as much cash as I probably did a long time ago, because again, I have choice. There's different ways to make payments now. So we're actively and we can active in the industry as far as creating new ways, whether it be Apple Pay or Samsung Pay and digital wallets. And we're wanting our clients to leverage whatever capabilities they want to use. We want to be relevant when and how and whenever they want to make a payment, as an example. I think honestly, I think that it's going to depend on what the value prop is for businesses, really, at the end of the day. And as interchange and other things continue to come down, and we find different ways to transact and in more efficient ways, I think that it'll just be more of an evolutionary thing. But I also think that things like regulation and politics also play a big role in that. I think it was Pennsylvania specifically where they had the whole cashless debate, and I think a lot of it comes down to people having preference and politics and a lot of different components. But it's hard to say, just because if you look at the rest of the world, they're moving in different directions, and we don't always follow at the same pace.
Yeah, it's actually New Jersey
at time.
New Jersey as well. New Jersey banned statewide, and Philly banned, and New York is looking at it.
Yeah, I mean, I don't know. I would say evolution will happen, and we'll see where it goes. But as long as our clients are still in the need of cash, and as long as our clients are still using cash, I think we'll find ways to continue to provide cash. That may mean putting machines in places that we don't have them today, or whatever way it is to get that cash to them. But it's really hard to say. I mean, globally, when you've got countries that are literally, whether it's China or even some of the Nordic countries, completely eliminating things like cash,
right?
It's hard to understand the pros and the cons in those countries versus what's going on here in the United States. But and frankly, I look at that stuff more because I want to understand what's going on in the global economy and what's going on globally in banking. Yeah. Even though that we don't necessarily play in those global markets, I'd like to just understand the trends and what clients are doing. But it's really tough to say how that's going to end.
Yeah. I wanted to ask you about some of the concerns that have been raised over the last year or so, both in the UK and in some cases in the US. I mean, we've seen, the movement towards faster payments, and there's a movement in the US to try to develop a faster payments framework. But we've also seen some of the pitfalls when these systems crash. And, we've seen, just a few weeks ago, one of your big rivals had a pretty bad kind of outage, and nobody could do any banking for a while in terms of any ATMs or credit cards. And we've seen in the UK several times where the faster payment systems have gone out and people were just unable to get hold of their money. Are there problems with the infrastructure for managing access to funds with all of the kind of faster payments systems, with SWIFT, with do you have any concerns about just being able to make sure that these systems can handle the volume and the change in how people conduct business?
Yeah, I mean, look, I think from a SunTrust perspective and a technology executive perspective, the two things that we can't ever screw up or try very, very diligently not to screw up is the stability of our platforms for our clients and the security of our platforms for our clients. So, both stability and security are going to be, can't fail type initiatives, where we continue to look at how do we increase, both of those things. The reality is that as we continue to find new ways and leverage new technologies to be able to increase speed and reduce friction and to provide clients the experiences that they're wanting, from time to time there are things that break and happen. Now you try to keep that to a minimum. You try to keep that to something that is not going to be widespread and really contain that blast radius when there is a problem. But I also think that, there's a lot of goodness that comes with some of the modern capabilities and technologies that are out there. And I believe that, it's more of a maturity thing, and how does that particular institution leverage it, and what kind of due diligence are they doing to ensure that when they launch a new platform or take advantage of some of these emerging technologies, that they're doing it in a really safe and secure way to provide those experiences. But, if you just look at it from a pure technology and infrastructure perspective, the elasticity and the speed and the real-time nature of a lot of what is being built today, it's fantastic, and it really does actually in some ways lend to more stability and more security. But the challenge is that, you tend to start mixing some of these emerging technologies with some of the legacy stuff, and you really need to be thoughtful about how you do it, and you need to make sure that you always have your client in the lens and in the center of all the conversations to ensure that, if something does happen, you know how to fix it, or how to provide alternatives for your clients, and do the right thing by them and make sure that, you come back up and come out of it stronger. I mean, I never like to bask in somebody else's issues or mistakes, because that's just bad karma, and nobody needs that, especially us.
Wanted to ask you a little bit about consolidation in the industry. Obviously, you guys are involved in your own situation, and there's been some fairly sizable deals that have been announced in the last few months with FIS and First Data and some of the other companies that have been involved in some of these mergers. Why do you think it's happening now? I mean, is it just, they've been kind of trying to arrange these deals for a while and now they're just coming together because of the economy? Or is there some need in terms of consolidation to provide a more robust platform for, various parts of the industry? I mean, what's happening in that space that you think is going on?
Well, so let me we'll hit the merger question right first. Look, I think, our particular news around SunTrust and BB&T merging, it is really exciting for us. We see it as a huge opportunity for two, purpose-driven, like-minded companies to come forward to absolutely unlock as much value as possible for our clients. And at the moment, it's too early for me to continue to comment further, but
sure.
When we absolutely look forward to sharing more about what we feel we're going to be able to do for our clients moving forward. In the broader landscape of technology, I think there's a lot of different factors. So, you mentioned a couple around the First Data and Fiserv merger and the WorldPay and FIS mergers, and I think what you see is that there are those industries specifically, in my opinion, are industries that have had long successful runs and relationships, and they've played in a lot of different spaces, whether it be the core banking space or entering into digital technologies or payments or you name it. They've been great partners and will continue to be great partners of us. But I think that you see early entrants and these fintech companies and others that are coming into spaces where they are not necessarily saddled with legacy systems and legacy architectures and infrastructure, and the speed in which they can build on some more modern platforms is definitely a disruption to them, just like a neobank or a fintech provider is a disruption to us in the industry. So I think they're looking at it from an opportunity to increase scale and the ability to invest and innovate. And frankly, I think it's fantastic. It's an opportunity for them to rethink some of their platforms and be bringing, again, like-minded companies together to provide better experiences for clients. So to me, I think it's great for clients and the consumers, and I think it's great ultimately for the banks to see that people aren't standing still, and they understand that disruption is real, and rather than be disrupted, they're disrupting themselves and looking at it as an opportunity, and I applaud them for that.
When you see companies that are in other industries getting into the banking space, I bring up, just this morning, T-Mobile, announced their entry into consumer banking with the new checking product, and Apple is working with a new product as well. What's your sense of how these outside technology companies are going to influence the banking space, and are we going to see more of that type of thing?
I mean, if I look into my crystal ball, I would say that those types of companies will continue to influence the banking space. I think we'll look for, as I mentioned earlier, partnerships and ways that we can really collaborate and provide better experiences and solutions the way our clients want. But at the same time, I also think that financial services institutions, we like to use the word traditional bank. But the reality is that I'm not sure that the traditional bank is what's going to be used, because there may be traditional products, but I believe that banks in the future will have to continue to provide new services and new products and new channels, and will provide services in the future that we would have never thought about a bank providing. You think about 10, 15 years down the road, which doesn't seem all that long ago, but I mean, you think about just how Apple launching an iPhone in 2008, and upon the launch, there were 2 financial services apps available. And now think about, go to the App Store right now and look at all the different financial services apps, and think about not only how that individual device disrupted not just financial services and the way we collaborate with our clients with things like mobile banking, but think about how that device has completely changed the world and human behavior. And so it's really tough to say how this is going to pan out, but I think if we listen to our clients and we understand how they want to work with us and how they want to experience both traditional banking services and maybe non-traditional banking services or products, I think we'll be just fine.
Okay. What's your sense of, we touched on this a little bit earlier, in the next few years in terms of getting a faster payments framework in the United States, industry-wide? I mean, I know that there's been efforts to move this along, but it's been a little slow in terms of the adoption. Where do you think that's all going to go?
Well, I mean, look, I think the Clearinghouse has been a great partner of ours, and I think the work they've done on real-time payments is definitely continuing to move the industry along, as you said. There's activity right now from a federal government perspective looking at those things and whether or not the government should be involved in setting up those new faster payments rails and how the financial services institution would integrate with something like that. It's tough to say if private sector or public sector will ultimately define how payments will be done in the future, but I do think that technology is a huge component of that, and being able to get some more real-time transactions, and whether that means there's a lot of people right now leveraging real-time payments, and you can see that the industry trends and the volumes of receiving payments. But there's not as many people on the issuing of the payment side that are signed up, because there's ultimately a guarantee that those funds are good. And as analytics and machine learning and AI and deep learning and all of those things start to come together to allow people to create risk models and fraud detection models and those types of tooling, I think you'll see people start to adopt more real-time payment type technologies, whether that be the RTP rails or whether that be something new that we haven't thought about yet. I think that's real, and as long as you can protect your clients, back to the security component of it, and that your clients trust that you're going to execute that payment. I mean, we also want to make sure that our clients know exactly who they're paying, and that they're aware of it, and that there's no fraud on that end either. But I think that faster payments are ultimately inevitable.
Okay, great. Well, Ken, I wanted to thank you for taking the time to speak with us. We're going to be keeping up with some of the developments, both in the industry and at your bank specifically. And so we hope to get an opportunity to speak to you again soon.
Great. I appreciate it. Thanks for the time, and anytime.
All right. Thank you.